Hey everyone! Today we're dissecting HDFC Bank's latest quarterly performance. As India's largest private lender with a market cap nearing rupees 13 lakh crore, this report is a game changer. Let's jump in. Let's start with the big picture. HDFC Bank dropped its Q4 FY25 results today, April 19, 2025, for the January-March period. Net profits soared 6.7% year-on-year to rupees 17,616 crore, smashing the CNBC TV 18 poll estimate of rupees 17,058 crore and topping last year's rupees 16,511 crore. That's a rupees 1,105 crore boost. Net interest income, or NII, climbed 10.3% to rupees 32,066 crore, beating the forecasted rupees 30,769 crore, up from rupees 29,077 crore last year. Total revenue grew 9.25% year-on-year to rupees 86,779 crore, though it edged up just 2.05% quarter-on-quarter from rupees 85,000 crore, reflecting seasonal trends. Loan growth hit 5.4% year-on-year to rupees 26 lakh crore, with retail loans up 9% and commercial rural soaring 12.8%. Deposits jumped 14.1% to rupees 27 lakh crore, the strongest quarterly growth in 4 quarters, fueled by 2.2 million new liability relationships in Q1. Net interest margin on total assets reached a 7-quarter high of 3.54%, up from 3.43% thanks to better yield on advances. This sets a strong foundation. Next, let's unpack the revenue engine. The 10.3% NII growth to rupees 32,066 crore is a standout, up from rupees 29,077 crore last year, driven by a 5.4% advance rise to rupees 26 lakh crore and a robust deposit base. Interest income hit rupees 54,000 crore, while interest expenses rose 8.2% to rupees 21,934 crore, reflecting higher deposit costs. Total revenue at rupees 86,779 crore shows a 9.25% year-on-year gain, but the 2.05% quarter-on-quarter increase hints at seasonal slowdowns, especially in corporate banking. Now, NIM, the magic number. At 3.54%, it's the highest since Q1 FY24, up from 3.43% last quarter. This reflects a 7.5% yield on advances, outpacing the 4.2% cost of funds. Money Control notes this could support profitability if loan growth accelerates. But analysts from Equirus Securities predict a dip to 3.4% in Q1 FY26 if deposit rates climb further. The bank's focus on retail loans and digital channels is key here. Asset quality is critical. Gross NPA improved to 1.33% from 1.42% last quarter, with rupees 35,222.6 crore in bad loans down from rupees 36,018.6 crore. Net NPA dropped to 0.43% from 0.46%, backed by rupees 13,100 crore in contingency provisions. Slippages, however, rose to rupees 8,800 crore from rupees 7,800 crore in Q3, driven by retail and SME segments per business standard. Recoveries and upgrades of rupees 3,117 crore, similar to ICCI trends, mitigated some pressure. Provisions fell 76% to rupees 3,193 crore from rupees 30,511 crore last year, a sign of confidence. CFO Srinivasan Vaidyanathan highlighted stable asset quality, but Kotak Securities flags a potential 3.1% slippage ratio if economic slowdowns hit. The bank's rupees 1.7 lakh crore retail loan book, up 9%, is a double-edged sword, growth with risk. What's HDFC's strategy? The bank added 2.2 million new customers in Q1, pushing deposits to rupees 27 lakh crore, a 14.1% year-on-year surge. Loan growth of 5.4% includes a 9% retail rise and 12.8% in commercial rural, with digital channels driving 30% of transactions. The board approved a rupees 22 per share dividend payable by June 27, 2025, yielding 0.9% at current prices. Market sentiment? Shares closed 1.2% up at rupees 1,780 after results, but year-to-date it's flat at rupees 1,760. Goldman Sachs sees a rupees 1,900 target with a buy, citing NIM strength, while BNP Paribas targets rupees 2,660, up 49% on loan growth. However, B&K Securities cautions at rupees 1,627, flagging deposit cost pressures. The HDB financial IPO, if greenlit, could add rupees 10,000-15,000 crore to capital. What's the future? Q1 FY26 guidance warns of a 1-2% revenue dip due to seasonal factors and higher deposit costs, with NIM possibly softening to 3.4-3.5%. Leave Mint predicts 5-7% profit growth if loan growth hits 6-8% and asset quality holds. The bank's 20% capital adequacy ratio, well above the 11.7% norm, supports expansion into rural and SME lending. Risks include rising slippages, tariff uncertainties, and potential RBI rate cuts impacting NII. Opportunities? Digital banking and the HDB IPO could unlock value, while retail loan growth targets 10% in FY26. Analysts suggest watching monsoon impacts on rural portfolios and global banking trends. Let's wrap up. HDFC's Q4 delivered a 6.7% profit rise to Rs 17,616 crore, 10.3% NII to Rs 32,066 crore, and a 3.54% NIM peak. Asset quality improved to 1.33% gross NPA, but slippages at Rs 8,800 crore need monitoring. The future balances growth and risks. Stay tuned. Hit like, subscribe, and comment your HDFC strategy. Explore our Earnings Insights and Future Trends 2025 playlist for more. See you next time.